Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with Carol Massar and Madison Mills. Welcome to our audiences across Bloomberg Television, Radio, and Bloomberg Originals, as well as for those folks streaming on YouTube. And Carol, we're going to get to the stock market news of the day, but we do want to get back real quickly to some breaking news here. This on Tesla. Ross Gerber, who had been seeking, or said he was going to seek an activist board seat on Tesla's board, now saying that he's going to withdraw that bid. Gerber saying that he did speak with Tesla this week before dropping that board pursuit. Tesla, in his words, or a source is telling us that Tesla plans to address some of the issues that he had, including succession planning with regards to Elon Musk.
Yeah, absolutely. We've talked with Ross Gerber several times here on our broadcast about that pursuit of his. Listen, Ross Gerber has been out there like a Kathy Wood, supportive of Tesla, the company, supportive of Tesla, the vehicle, and supportive of Elon Musk generally. And so when he initially said he was going to go for a board seat, that was quite an eye-opener for everyone. Keep in mind that the company has agreed to meet with Gerber next week around Tesla's Investor Day on March 1st. That's a big day for the company. And they are going to talk about the company's governance in particular. And, you know, look at the board. There are people that are certainly friendly to Elon Musk in particular. And Gerber has been a little worried about Elon being spread a bit thin.
Yeah, I mean, that might be an understatement. I am curious, because you mentioned the Investor Day here and that just the timing of this here. But the idea of sort of what an activist can do in this situation, given the current structure of their board and, of course, given the voting shares that Elon Musk himself holds.
Yeah, no, absolutely. But listen, there's been a lot of press spent around this, and a lot of people are wondering about it. And it's hard, especially since Tesla's been on a tear this year. All
right, we're going to talk a little bit more about this, but we do want to get back to the broader market as we get the closing bells here in New York. It is red all around, but we are off the lows of the day. A Dow Jones Industrial Average lower by about 336 points or 1%. The S&P 500 down about 42 points or about 1%. At one point on the day, it was testing that 200-day moving average, but it's going to close above it at 39.70. The 200-day right now sitting at 39.40. Meanwhile, let's take a look at the NASDAQ Composite, which is down 195 points or 1.7%, and it is closing below that 200-day moving average. Remember, it broke above that last month for the first time in a year. Now, closing below that. So a little bit of a downward trend line here, at least in the short term. The Russell 2000 going to finish the day down about 0.9%. And of course, we should point out the Russell and the Dow have been firmly above their long-term moving averages, as a lot of people still think there's a lot of life in some of those cyclical names.
Yeah, good point. And, you know, despite a name like NVIDIA having a great week, up almost 9% for the week overall, if you take a look at the trade here, you can see clearly the risk-off trade. Katie, you had almost 400 names in the S&P 500, lower today. So definitely a much more negative tone here in terms of sentiment.
And it's certainly risk off if you look at some of the industry groups as well. At the top, you do have a little bit of green. The materials industry group up about 0.7%. Then you have some of the banks as well. Higher rates, that should be good for bank stocks. At least that's what you're seeing today. But then you go down the list. It's a lot of red. You have software, real estate. And Carol, you were mentioning the tear that Tesla has been on. Not so much today. That's bringing down the auto group as well.
All right, good to know. Let's get to some particular gainers, because there were a few standouts. Beyond Meat, we broke their earnings after the closing bell yesterday. That stock up at its highs, up 33%, finishing the day with about a 10% gain here. Fourth quarter net revenue topped analyst expectations. Its adjusted per share loss narrower than the average estimate. So some indications that this company was progressing toward its goal of becoming profitable. Stock's been on a tear this year. It's up about 50%, but keep in mind, heavy short, about 37% of the float is shorted. So something to think about in terms of the trade. Farfetch, also a standout, up more than 11% in today's session. It's a specialty online retailer, e-commerce marketplace for those luxury boutiques around the world. They did come out, fourth quarter revenue beat expectations, and analysts were broadly positive as the company reiterated guidance for 2023. So noting some of their partnerships that they have with Neiman Marcus and others. CFO, though, also stepping down, planning to this year as well. So some news there. And Edison International, this was was topping the S&P 500, kind of plain vanilla company, a utility. It was up about 4.2% here after a fourth quarter earnings and revenue beat. So just wanted to put that one in the list as well, Matt.
And just real quickly, I'll just add another mover, a gainer, Range Resources did close up here on the day on the back of speculation here on the Bloomberg report that Pioneer Natural may be weighing a bit. Matt.
Yeah. Well, speaking of Bloomberg reporting moving the markets, I'm going to start off with Adobe here. Shares are down a little over 7.5% after that Bloomberg News report that the Justice Department is preparing an antitrust lawsuit to block the company's acquisition of Figma. Analysts, of course, seeing that deal being critical for Adobe's growth, and that suit from the DOJ could be filed as soon as next month. So really interesting to watch, and that is pulling down the overall sector today as well. And then I got to talk about Carvana, guys. Shares of the company sank as much as a little over, I think they're at over 20% in the close, biggest drop since December 7th after they reported a much wider loss than what analysts estimated. We know the stock's been on a wild rally this year, rising more than 110% through Thursday. But, you know, they've got a market valuation of $1.5 billion, total debt of $8.1 billion, and only $316 million in cash. And then we've got Tesla down about 2.5%. That's just, you know, tech going down today after that hot PCE data this morning.
Yeah. Pop quiz, Maddie. What was the biggest decliner in the S&P 500 this week?
I know, Romaine. You know, why did I not pull that up before our conversation? Because I know you love that question.
It was Moderna.
It was Moderna?
Well, it's second low.
No.
Domino's Pizza.
What was-
Wait,
Domino's Pizza.
Did you do 5 days or 4 days? Did you do a specific search here on the
It's a 4-day week.
I know.
Monday was a holiday.
Well, I did it 4 days, and I got Moderna.
Okay, well, I mean, at one point when you get to my clout, they'll give you the real Bloomberg terminal with
My
all the real
takeaway is
pricing
that I'm
on
not
it.
wrong.
Romaine actually has
my
future
takeaway.
pricing. It's not delayed. It's looking into the future.
All right.
All right, real quickly, let's get to the yield space because there was a lot of activity
Yes.
there. Your 2-year yield up 11 basis points just on this day alone, about 19 basis points on the week here. You add that, of course, 10 basis points last week, 22 basis points the week before, 10 the week before that. We've basically gone from about 4.1 and change to more than 4.8% here. Similar moves across other parts of the curve here. So a bit of a repricing from where we were, Carol, just a little while ago. And that really kind of sets us up for next week here.
Yeah.
Because we've got some earnings, mainly a lot of the retail type of companies are going to be reporting. Not a whole lot of economic data. I think we get some durable goods coming out. But I'd be curious to see what the catalyst is going to be to either move this market higher or lower.
Well, I do wonder, especially coming off of the personal spending number, right? Consumers are out there still spending, right? They're saving, they're spending, their incomes are up. So what do the retailers say, and what does it tell us about the strength of the consumer? So important, as we know, to economic growth going forward.
And it's also going to be interesting to hear commentary about what they're doing to either protect or sacrifice their margins. How much pricing power do these retailers have left? That's what I'm going to be looking for next week.
And looking at just, I mean, we've been talking about this, that consumer resilience, right? Whether or not consumers are continuing to just spend. And we've been talking about this too, Carol, that consumers also saving more, and as noted in that PCE data this morning.
But then we said that I know a lot of people didn't really look at the Michigan sentiment data, a revision on that, but that was also higher as well. And we're going to get consumer confidence data out of the Conference Board next week. So I guess, you know, there is an argument to be made that if the consumer is, I guess, relatively happy, or at least they're not scared away, and they have the capacity to spend, which at least for now it looks like they do, then are we maybe worrying a little bit too much?
I think it's remarkable that consumers are still spending. Considering some of the sentiment that's out there as rates go up. I mean, the home sales number, the highest in a year.
Yeah.
I know a lot of it was in the South, but nonetheless, that to me shows strength. And this is that more evidence to this soft landing idea?
And are we in that wage price spiral too? Because we're seeing wages so high.
I will make the point, though, you know, this sentiment on the ground and what we're actually seeing in the data. This is something we've been talking about, I feel like, since the pandemic kicked off 3 years ago. The fact that consumers are miserable, but they're still spending a lot.
Yeah, absolutely. I do want to get back just to a couple events for next week. We sort of alluded to it. Tesla having an investor day next week, and we had the news that Ross Gerber, at least based on Bloomberg reporting, with people familiar with the situation, is going to withdraw his bid for a board seat. And then Goldman Sachs having their investor day, too. And we know David Solomon has been, let's just say, under scrutiny as of late.
Yeah, and don't forget, you've got the Buffett, you know,
on Saturday.
Warren Buffett letter that gets at 8 a.m. tomorrow. And I do feel like I want to see what he has to say. You know, he got out of TSM, you know, wondering if that's going to be in it, what he talks about broad macro, if he has any ideas. So that should be on our radar, at least for the next 24 hours?
It does get back to the question of what is going to be the catalyst next week. It sounds like we're going to get a lot of talking, but we'll see. Maybe it's earnings.
Maybe it's earnings, but there's a lot. I mean, you talk about Target, you talk about some of the other big retailers, and then a couple of big names. You got Salesforce also reporting as well. So you do have some names that could potentially move the market here, depending on what they come out. Macy's, Nordstrom, all those department stores, Best Buy.
We're now less than a month away from the next Fed meeting.
Oh, gosh. Are we counting down to that already?
Yeah.
Okay, put up the clock.
I just love the dot plots. What can I tell you?
The dot plots.
You know, that's what we economic types like to look at. All right, guys, that's a wrap.
Before we go?
Yes. Is it your birthday?
No. You don't know when my birthday is? Sorry,
What?
Some breaking news crossing the wire right now. This on Meta Platforms, learning that the U.S. FTC is going to drop its antitrust case over Meta's VR startup buy. Now, I assume we'll have to dig a little bit deeper into this, but I assume this is referring to that acquisition that it was making of the headset maker, of the software maker, that they were trying to integrate into that headset here. Of course, we know that they had already had a minor victory in court over this, so the FTC appears to be dropping its case, antitrust case.
All right, good to know. Stock is flat in the after hours, but the news continues to flow even after the market on this Friday. All right, guys, have a great weekend. That's a wrap for our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We do it all. We call it Beyond the Bell. We will see you again, same time, same place on Monday.